Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm live with another live session with you all. And hopefully, all of you are doing well on this Sunday morning. So, I've come here on a short notice. The update for the live session was put up just about a couple of hours back, and I'm here live. So, I know that most of you might not have got the update for the session, but hopefully 90% of you would watch this video post the upload. So basically, today I'll talk about whatever that has taken place over the weekend, and that is with regard to the petrol price cuts that are coming up in probably in a few days time, and whether it will have a very positive effect on the market or not, and what I believe of it. Plus, I'll answer your queries as well. So it's not going to be a very long session. It's going to be a 15-20 minutes session in all. And I'll focus more on answering your queries, and would request you to use the super chat and super sticker feature that will help me grow the channel, that will help you also ask me questions and eke out answers in greater detail. So I'll just talk about the markets a little bit and then move forward, and a little talk of the US markets as well. Uh, so, hi, good morning, Abhijit. Hi, Saeed. Morning. Uh, Anand, morning. So, uh, see why market went up on Friday, because Dow went up on Fridays. I'll answer queries later on as well. Dow went up on Thursday. Ashish, hi. Nagarjuna, hi. Uh, so Shushant, a very good morning. I hope more people join in as it's a Sunday morning, so most of you would be at home. I know that now offices have opened up, and it's extremely difficult to be online on a Thursday afternoon or something like that on that morning. So let's just talk about the markets a little bit. So the markets went up on Friday, and after that we saw that the Dow went down sharply. So we may have a gap up or a gap down opening. I'll talk about that later on. But on Friday, the markets were really chirpy, and most of the rate sensitive stocks went up. Most of the stocks which were economy related did extremely well, and most of the beaten down stocks, like you can say Amber Enterprises, etc., most of the stocks that have been beaten to pulp went up and went up sharply. So I believe that that was a short covering rally, a rally in which shorters have made a lot of money, shorting the market from 17,000, 17,300, 400 levels, and are trying to cover the shorts. Around 15,700, there is a lot of, you can say, support. Below that, around 14,800, there is a lot of support. So, 1,000 point gap gap down over a period of time is possible if 15,700 convincingly breaks. That's another point. So these are levels which are extremely crucial for the market, and over a period of time we have seen enormous decline and enormous, you can say, bloodshed in most of the stocks in the mid and small cap, between 30 to 70, 80%. And if you go back to the US markets, that was what I was wanted to talk about. There have been many IT stocks, you can say platform, online space stocks, and Netflix, etc., kind of stocks that have gone down 70, 80% in value. So there have been a lot of mayhem across the globe, and India is not out of the realm. So with respect to that, India is not, you can say, disconnected from all of that, and that is why we are seeing 50-60% downtake in many of the stocks, especially in the new age companies. What I feel is that we may not go up sharply very quickly, but we may be very close to a bottom. I believe, I have always believed that over the last 2 weeks, that whatever we are seeing, that the market is coming back from 15,700, that we are seeing some sort of a bottom formation, and that will be confirmed over a 2 weeks period. So by mid of June or around 10th of June, if the market do not break 15,700, that is a confirmation that probably we are gearing up for a big up move in July, in late June and early July, and probably whole of July. So the markets are not out of the woods. The markets are not going to just sharply go up as to what happened in 2020. Uh, but we will see an arrest of the down move, and what has been the precursor of that? That it has been this fuel price drop, or the government reducing the excise duty, etc., that is going on. So I believe that going forward, we'll see this 9 rupee fuel drop will have a percolating effect on everything, whether it is food inflation, uh, whatever raw material cost or energy prices cost for many of the companies. So a lot of, you can say, expenses would be taken care of once this gets implemented. And if most of the states, especially in metros, say in Delhi, Bombay, uh, Kolkata, etc., Mumbai, for that matter, if these states cut down on the VAT, then we'll have even better effects. Say 12, 13 rupees drop in, say around a 12 rupees drop in oil prices will have a tremendous effect on the balance sheet and profitability of the companies. Probably going forward from September quarter onwards, and the market will try to, you can say, calculate and adjust to these things immediately. So what I believe is that although US markets are falling and they may fall going forward, India might get a bottom in place over the next few days, probably a couple of weeks. And that bottom could be 15,700, where we are sitting at the moment. And we could see a rally not only to 16,200, 300, where we are at the moment, but even 16,700, 800 is possible. Beyond that, I find it difficult for the market to move forward. It could be a possibility if the dollar arrests the move in terms of its value. If the rupee arrests the down move in terms of its value, 77.7 rupees to a dollar, if that gets down to somewhere around 76, that would be an even better thing for the market, because FII outflows might just get reduced. So there are two, three things that has to take place in order for the market to go beyond 16,800. I believe 500-600 point rally is very much possible. That could happen this week, by Wednesday, Tuesday, Wednesday, in 2-3 days time. We see how the markets behave. We see how markets can go up in a day 300-400 points. So probably 600 points on the Nifty is a couple of days work. But beyond that, if if we want to see a rally towards 18,000 and all, these things have to come in place. First, the dollar rupee equation has to balance more. So 77.7 should come closer to 76. Below 76 rupees to a dollar, that would be a huge positive. That could be a possibility as inflation ebbs now. I believe inflation might just peak out with this 9 rupee price drop on petrol, and whatever price drop is happening on diesel. And that would percolate down to probably the dollar getting weaker compared to the rupee, and also 75 to 76 rupees to a dollar, very positive for the market at this point of time. A second thing that needs to happen is inflows of the FIIs should come in now. uh, Although for the last 14 months they have been selling, if we include May, then it would become something like 13, 14 months that they have been selling in the market relentlessly. uh, I have a feeling that what this triggers, this trigger of the drop in oil prices in India, uh, could end the kind of relentless outflows that we are seeing. And there could be an understanding in at least 20-30% of the FIIs that, okay, whatever inflation that came out, say 16% WPI, whatever, 13-16%, it was pretty high when you compare it in the last 9-10 years, for the last decade. That might be the peak. And in that regard, some of the stocks, large stocks, I'm not talking of smaller stocks, but large stocks, Nifty stocks, or large mid cap stocks which are not part of Nifty are coming at very, very attractive levels. So they may try to delve into them. And that is where the market will arrest its fall, because little bit of FII positive buying will really make the market go higher. So dollar coming back to 75, 76 rupees, between that and FII inflows to come in a little bit will only make the market go higher than 16,800. Otherwise, the base case scenario is that we will be in this range between 16,800, 900 to 16,200, 300 for the next 2 3 weeks. And many of the stocks will go up. So something like a DMart, and this is not a recommendation, anything that I discuss here is for educational purposes, but the DMart that made a bottom at 32, 3300 and is around 3500 may go to 4000, and then may just stay there 3800, 4000, 4100 for few weeks, before taking before making any move, whether downward or upward. That would all depend on how things pan out post 10th, 15th of June. There will be rate hikes, but now I believe that the rate hikes will not be that aggressive for the time being, but that will be an even bigger positive. So stocks in infrastructure, real estate will benefit, real estate ancillaries will benefit. So a lot of your these polycabs, astrals, and real estate companies, they will all perform well, and that will take the market higher from 16,200. That will take the market higher with the respect to the mid cap and small caps. But after 16,800, 17,000, I see a lot of headwinds, and the market may end up going back to where we are currently. So we could be in a range, but that range would go up higher. It won't be a range of 15,700 to 16,300. It could be a range of 16,300 to 17,000 at best. So that's the call. There are many companies that are coming at huge discounts. If we take into effect the kind of price drop we'll see, in terms of inflationary drop we'll see, a lot of companies will benefit a lot in many sectors. So you have to look at where the most of the value lie, and you'll see a huge run there over the next week, 2 weeks time. All right, so I'm ready to answer your queries. Can you use the super chat and super sticker feature that will help me grow the channel? That will help you also ask me questions and eke out answers in greater detail. uh, Inflation is not only for oil prices. This perception is wrong. So basically, inflation has percolated because of the oil prices. So if diesel prices drop sharply, a lot of the inflationary pressure will be taken care of, because that goes through the CPI index and everything, whether it's foods, vegetable, uh, everything, whether it's your school fee, etc. Everything gets hit, because the bus fee gets hit, transportation gets hit, and everything. So it is the major chunk of the inflationary pressure we are seeing here in India. So Dr. Lal Path Lab is having a fundamental issue. So that is why I'm not talking about it that much, because if and that had to come up sometime. So if Tata comes in big time and sells test at 100 rupees, even if they sell test at 300 rupees going forward, 350 rupees, these companies like Dr. Lal, Max, etc., even hospitals would have to reduce their prices for major tests, different types of tests that are conducted very regularly. In that respect, I feel that they have to change their business model in order to come up with anything, probably expand into southern India and other parts, and generate more revenues, so that more profitability gets in. So marginal utility comes into play, and everything, whatever comes, what economies of scale and everything. Otherwise, there is a problem with Dr. Lal. So my call there is, do not add on to the stock. Whatever you have, hold on to it and wait for a recovery. It will take place, or a huge run. any rally into Dr. Lal Path Labs and you get your prices, probably you probably sell. If you have more than 5 years, then the thing is the brand should take care of itself and should move better and higher going forward after 3 or 4 quarters. I think the next 4 quarters could be extremely difficult for all lab and these kind of companies. So next 1 year could be extremely difficult. If you have more than 3 year time frame, then hold on to the stock. I think Nika is good in my respect, Gurpreet. I believe new age company. I believe Nika, but long term, I mean at least 5 years and preferably 8 to 10 years. I think Nika could be huge going forward from these levels, but you have to be patient. Nika could go to 1,000 rupees. I'm not saying it's going to go up from here. It could very well fall another 30% from here. They are expensive. These companies are extremely expensive even now. But over a 7 8 year period, if you discount the earnings, then they look very attractive. So JK Cement is one of the top class cement companies, especially this cement and wall putty that is being used of the company is perhaps the best. Uh, Again, buy into cement companies if you really want to buy. Then post monsoon, and if you have it, then hold on to the stock. I think these companies will also benefit and will go up over this 1 week, 2 weeks period. So if you have it, then hold on to the stock. See, Amtar is a very, very decent company. It has come down from the high. These are attractive levels to buy, but again, from a 3 year point of view, not from a trading point of view, also. So, Baljit, if you have bought a Kilpest at 700, hold on to the stock. I feel once all these things happen, whatever things I've always talked about, these triggers take place, say NSE listing, 3V Black Bio listing, and many other things that Kilpes doing. They have a lot of cash on books. They may acquire companies. So I think very easily possible that the stock will double from here, and I still believe that 2,000 to 2,500 is a possibility over a 3 4 year period on the stock. All right. HDFC MC, why do it keep on falling? Because the valuations were stretched earlier and now everything is coming back to mean levels. AMC stocks will perform once the market really does well, especially the financials, etc. You have to keep on accumulating. If you cannot buy here, you don't have cash, hold on to the stock. It will perform well over long term. See, in the short term, what I have told about the markets, that could be a possibility that will go up 5 600 points, but will remain range bound. And which stocks will go up, we'll only know in hindsight. We cannot say right now that this sector will do well in the next 6 months or the other sector will not do well. I would avoid. I have seen the results and all, but the way the reaction has been of the market, I would avoid most of the chemical companies, alkyl amines and Balaji amines for sure. Uh, Large chemicals companies which are monopoly, you can probably look at, say, a Naveen Fluorine, SRF, Pidilite, these kind of companies, but smaller companies I would completely avoid. Yes, Rajratan Global is a top class company. Now, in these small cap companies, what you need to do is buy and hold. So I am invested into Kilpes. That's a disclaimer, and I'm down 20%. I'm holding on to it. I know what the company could do over 3 4 years if they intend to do it. If they don't do it, then I'm losing that money. So in these smaller companies, you put that money that you're not worried about for the next 4 5 years, and let the company perform over that period, and then take a call. So same with Rajratan. So Tata Chemical, again, very decent results. It's a buy at these levels for a 15 20% upside. But again, keep strict stop losses. See, Birlasoft and all IT companies are very attractive right now, but you have to have a 9 to 18 months time frame, preferably 15 18 months, for the real performance to kick in, because they are becoming more attractive day by day, and the performance stock wise could be very big over 18 months, but over 5 6 months they might not give you any return and you might get frustrated and sell the stock. So That's the call. See, both are good, especially FL. I can't say much about Tanla because of the kind of humongous numbers that it is producing. Whether this momentum can continue or not, I'm not that sure. But FL around 1,000 looked attractive from a 3 4 year point of view. From 6 months, it may go to 1,200, come back 1,200, 1,250. But over 3 4 years, it could be very big from here, FL. All right, guys. Thank you. Thanks a lot for being online. Kindly do subscribe to my channel, hit the bell icon so you can get my videos straight away when I post it, and support me on Patreon. Thank you.